right. Welcome, everybody. Hey, Sabir. Hey, B-Ray. What's going on? Got lots of people. Welcome, everybody. It is 10 seconds till 5 o'clock. So let's get started, shall we? Hey, Ray. All right. We've got YouTube going. We've got Zoom going. We've got... This is downtown Knoxville. There are still some green leaves on the trees, so this was not the most recent picture. But they do have a skating rink set up just off the left of this picture, and it kind of looks like this right now down there. So it's called Market Square is where this is. There's lots of shops and restaurants right in this zone. So it used to be the old, I guess, the market where the big market in town. Anyway, welcome everybody. This is the next to last one of these in 2022. Now, this is 30 Minutes of Awesome. I'd like to welcome everybody. And before we get started, let's go through the disclaimer. All trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. This presentation right here is intended to be informational, educational, and fun. It is not a recommendation to buy or sell any financial instrument. I may be completely full of crap. It's up to you to decide. And if you desire personal financial advice, remember, hire and consult a financial advisor who is certified to give you personal financial advice. Otherwise, let's jump into it, shall we? Now, before we start talking about the markets, I want to talk about this right here. This just happened. Come on now. Where did that go? There we go. FedEx misses on revenue. Cuts another $1 billion in costs, trims its outlook for next quarter on continued demand weakness. I mean, this just came out like less than 30 minutes ago. I mean, they announced their earnings and got murderized, right? That's pretty consistent with the not a recession that I've been talking about since July. I mean, I don't care what they want to call it. I think we've pretty much been in a recession. We're potentially rounding the bottom of this thing. Job losses, lower demand. I don't care if the prices are still high and their made-up employment numbers, show that we've still got full employment or not. But it doesn't look good for not being, not a recession. Anyway, we came down. We talked about this last week during 30 Minutes Awesome right here, that we were dropping on the CPI print, and I talked about if we dropped on down and came through these lows on the FOMC rate announcement, which it came in right at 0.5%, just like I thought it would, just like Jerome told us the week before he was going to do. Well, we came right on down to the green box. Now, we kind of touched the top of the green box yesterday, consolidated right around it today during the open market. The futures actually poked on down to about 3,800, well within the top of the green box here. Now we may, this doesn't all have to happen, but we may bounce back up into the 3,900 area, right back up from where we came, before we come down one more time and touch this pink line, the 618 level, around 3,720. That is entirely possible. Now, the ideal place for us to form some sort of bottom and bounce is this green oval I've put on the chart. Why is that? Well, it's just math. That's where that level comes from. It's between the 50% and the 618. What would be nice to see? Maybe another day or two relief rally, a little spike down, and we just go right back up here. This green box up here is going to be resistance. Of course, we do have resistance at those prior highs too. Now that we've kind of topped out there twice. So we got some upside resistance. Not going to fib it, not going to pretend like it's not there. So we've got some headwinds to go higher. And we've also got a nice big fat support box that we can test on down into. That's entirely possible. But we have seasonality on our side here. Typically, the last 2-ish weeks of the year on S&P 500 seasonality, we see a rally. Now, another one I've been keeping my eye on. I made a few YouTube videos about this in the past. And let me see if I can zoom it where we can see the whole thing. No, not going to zoom right now. That's awesome. Love it. There it goes. Delayed reaction. All right. So we have, this is S&P 500 stocks that are above the 50-day moving average, the S5 FI. And I'm pulling it up on bar chart because it doesn't scale it every time I pull it up. I can pull it up in TradingView just the same. But right here, I was warning that we'd probably see a pullback because we were up here above 90. This thing does not like to hang out above 90. It just doesn't. I mean, see back here. It also doesn't like to hang out below 20 and certainly not below 10. You know, we only stayed below 10 for like 8 days, 6, 7, 8 days in a row. And then we started rallying. And then we got up above 90 and then we started pulling back. And we've gotten back to the middle, back around 40. You know, we dipped down into the mid 40s yesterday, parking today around 49. This is the place where we can form a bounce. Now, why do I say that? Well, let's jump back over to TradingView and zoom out to history. Let's see, conveniently I drew that weeks ago and we just did that almost exactly. This is the same thing. It's got the 80 level and the 20 level kind of highlighted with red lines. Now if we zoom back in our time machine here, zoom on back to 2020. Right here, you can see we rounded the bottom, we came up, rounded the top above 90, then we pulled back, we stopped right in the mid 40s. This is in June of 2020. And then we proceeded for the next 3 months to pop up to 80, down to the 45, 50 area, back up to 80, back into that 50 area, back into 80, back down into the 60 area, back into 80, back into the 50 area, and finally we broke somewhere in September and we returned back down to the 20 area before we came back up to 80 again, back down near 20, back to 80, and kind of parked up there through the first months of 21. So this right here can happen again. Like that can be our rally that starts off, kicks off. All right. So I just want you to be prepared. Like we don't have to keep doing these extreme moves all the way back down to the bottom. We can just kind of chop right here as we move out to all-time highs. That's entirely possible. You may be thinking, what are you even talking about? This thing does not look like it's an all-time high situation, right? Well, let me pull up something else really quickly. My simple chart. Leave that one. Leave that behind. So check this out. If I add, there it was right there. That's what I wanted right there, that one. Let me see if I can get this to show up properly. I need the daily time frame, not the hourly. And we're going to have to zoom up quite a bit to get this to show. So look, starting at this dip. Let's line it up right there. Starting this dip, we had, this is inverse VIX, right? So VIX usually pops when the market drops, all right? So what I'm doing here is inversing VIX. And what we see is something a little crazy here. This thing is not gonna let me move it around the way I want to, probably because the auto maybe? Nope, I don't even know. What we've got going on here, and it just disappeared again. Awesome. Show back up. Nope. Cool. Love it. Anyway, we have a decoupling of VIX. It was riding right along with the S&P 500, and now it's kind of flipped. And why did I put on VX is the future? If you actually did the inverse VIX itself, it's a little more volatile and crazy. Right there, you can see it's a lot more volatile. The future was hanging with S&P 500 a lot closer. I'm not sure what's going on with the chart. The chart is not liking that VIX on there right now, so I'm going to turn that back off. So we came up near, turned down, potentially finding support to move back up. So that's where we are on the S&P 500. Nasdaq still looking a little more bearish. pop up the future. Well, we don't want the simple chart. We want the actual chart. So flip back over right there. This one did a 3-wave move right up into the roadmap line and pulling back. Now 3 waves up into the roadmap line usually results in a lower low, and this thing is not far from it. We can get a lower low. It's only going to take not even 1,000 points left. I mean, the low right here today was 11,000, and this low back here was right at 10.5. So another 500 points and change, and we can see a lower low on Nasdaq. I'm not discounting that we don't see that. So potential way to play that, SQQQ. You could go long on a leveraged short SQQQ. QQQ being the ETF for the Nasdaq. So that's a way to play if you believe that might happen. Now, I am not in that trade. Full disclosure on that one. So it's just something that potentially is out there, though. So that definitely can do this. Now, does it have to take S&P 500 with it? No. I mean, S&P 500 looks a lot better. This did kind of a 5 waves up into this high right here and pulled back right to the pink zone. Holding this pink zone is completely healthy for a move higher. So it would be unusual, but tech is still way over leveraged compared to its historical levels. Now, small caps here, looks like it's trying its hardest to wrap up its correction here. It is pushed a little deeper. It is at the 618 level. It did do kind of a very sloppy 5 waves up into this high back here in November. Made a lower high recently, and even on the CPI print, it made even a lower high. So that's 2 lower highs in a row, and pushing down right to the 618, finding support there. I would say a break back above like 1786 could be an indication that this thing's going to go to a new high, higher than these highs right here. Not necessarily a new all-time high yet. We've got some resistance here, that we're going to have to work through before we can really see an all-time high in Russell. And that's kind of where we are right now. If we do break down below this 1704 area, where this 786 is, we start breaking below that 1700 area, then we're likely to see a lower low in Russell. And how do you play Russell? That's IWM. If you're unfamiliar, that's the ETF for Russell. I'm using the futures because they don't tend to make gaps in the charts, and the market math things I do works out better. So yeah. All right. So that's how you play Russell. You just knock a 0 out, move the decimal point one place. That's the prices for IWM. QQQ is divide by 41, and SPY is knock a decimal off for the S&P 500. All right. Anybody got any questions on the broad market so far? Let's talk about oil briefly. We did get those 3 days of rally and kind of some consolidation the last 4 days. So what do we got? Well, we still have a downtrend cooking, and we're not breaking that downtrend so far. That high, and the high today. What does that mean? Well, it means that oil is still set up for a lower low until such time as it can break above, kind of retest support, and then move on up out of this zone. So I am still sitting on my hands for oil. There are some charts that look like they could be set up for something, like this one I talked about a few weeks ago when I got in at 29, rode it up here to 30, I don't remember where I got out, 32-ish, I think. We have pulled back to this support level, the roadmap line that I talk about all the time, in a 3-wave type move. We could go a little deeper, but this right here, if we move up out of here, I've got an alert like 3150. If we start on, filling this gap back up to the upside, I'm going to be looking for a new position on crack for the next leg higher. All right. Yeah. All right. Yeah. I mean, this is U.S. oil refiners ETF. So this is not just oil. This is U.S. demand on oil. gotta know what you're playing. All right. Gasoline prices getting a little rally here, but I'm still expecting that final push down to this 190 area. And we did basically hit the $2.02, and we came 2 pennies shy of the $2 price I was calling for several weeks. I'm still kind of thinking we're going to see one more push down. We have this. We're just trying to push up through this trend line. I've got to see a solid move up, make a higher high than we saw back here before I'm convinced that that's all for gasoline prices. Gasoline moves independent of oil, so anybody that thinks they move in tandem, they don't. They can decouple and go their own ways. They're traded independently. Natural gas right back down here. That was not what I wanted to see. Poking a lower low than we made right here. I was optimistic on this bomb blast, cyclone, super cold situation coming up, but seems the natural gas market not convinced. Usually we get these big spikes on weather events, so we'll see what happens next week. Otherwise, I may be pulling the plug on my natural gas trade for January. Gold, really trying to break out. This has a kind of a lower high situation today, and it's going to look a lot better if we test the roadmap line right over here in the coming days. That holding right in this zone is going to be my signal to start looking for a gold trade. Now, this one already doing that, GDX. So that's this right here is the chart why it's got my attention. So GDXJ also has the same sort of pattern going. So I've definitely got my eye on gold right now. SLV is gonna need a bigger retrace. This is one big giant move without significant retrace, and this thing is gonna need to come back in this zone probably. And for whatever reason, my arc didn't draw. So probably come back down in this zone, and that'll be when I'm looking for silver. I've already got a small silver trade going on, and GLD also is needing to get a pull down. All right, that's what I've got on those. And we don't usually cover lumber and sugar and all that stuff, so let's move on, shall we? I did briefly talk about crypto last week. Where'd that go? I think it's back up here. There we go. So Bitcoin just consolidating sideways. We got a little excited, got up to this red zone, rejected it back right into the consolidation that we've been in. And this is a relatively low volatility for 2 months of Bitcoin just to go sideways like this. So this is this a sign that we're nearing the bottom here? A lack of enthusiasm to go higher or lower. Now we did kind of do a sideways up here too before we got a nice spike down. And this right here looked a lot like that. That's why these ovals are drawn on here. This little final move up and drop looked a lot like that final move up, but we didn't drop. We just came back into the consolidation. So interesting what's going to happen. Now on the bigger time frame, bigger picture, this thing did pop up through a trend line and back tested it, and today turning green. If we break this prior high back here at 18, roughly 18.5, I'm going to be looking long for higher targets back up into the 25,000 area on Bitcoin. So you can play that with BITO, BITO, if you want to play an ETF that trades the futures. This one's already a little more advanced on the charting than actual Bitcoin itself. All right. Let's take requests as usual. Now that we've kind of gone through the market, if you have any questions on the markets that I've covered already, you can ask them. Somebody asked me about the dollar earlier. This thing not quite pushing to the lows yet, but at this point, I do expect lower lows on the dollar. Now we may get a back test of the roadmap line from below before that happens. Pull back up in here, like so. Pull this down like this. We may see it come back up here before we see that next leg on down here. So just be careful on that one. All right. Let's see. We got some stocks in YouTube. All right. Mora broke all the numbers, broke all the levels. If you're interested in that, I have targets in crypto power plays. there is a $3 and change target down there, and it's in 390 today, so that's in play. AG, yeah, just trying to chop it around the roadmap line, nothing great. Let's see, AGQ, and that one, just like SLV, probably needs to come back and visit the roadmap line some point over here, so we can get a constructive next move higher. Ideally, I'd like it to see it match this kind of pullback right here, which that was very similar, something like that, and match one of these prior pullbacks over here somewhere, get an echo, and then we can see a nice big strong move off of that. So, all right, ETH, Ethereum, ETH, or do you want to eat Ethereum actual? I mean, that's just a sloppy downtrend chart right there. Nothing positive going right now. It's just sideways and still making lower highs. Not nearly as enthusiastic looking as Bitcoin. All right, Boyle is still looking pretty bad. That's a downtrend. Of course, you've heard me say my weapon of choice, UNG, not making the lower low yet, but that doesn't look positive. Looking kind of bad, actually. Natural gas may be done. All right, so just so you know, if you're watching this at all and you lose me, or have to step away, you can come back on YouTube. Let's pop this up real quick, jeffreytrader.com/YouTube, and catch up with me. So it is live streamed, and you can go over there and catch it anytime. So, all right, SBNY. That's just a downtrend. Where's the bottom? Probably down here. That's support. It does have the zone like that. Doesn't look good. I mean, that reminds me a lot of Tesla right here. I drew that support zone off of that consolidation before, and look where we went to. I talked about this for a couple weeks now, that we're probably going to get down to this 35 to 50 zone, and right down in there today. Went even faster than I predicted. And we need this 35 area to hold down here. It looks like it goes down as far as 30 probably. Kind of sloppily drew the box because, well, didn't feel like I needed to draw it super tight. Yeah, it looks like those lows come all the way down to about 125. So this zone of support actually comes down to those tails, and it may extend down to these other tails too. Yeah, so right now that's what Tesla is. What do we expect? Not a lot. It's got to start turning up, making higher highs. So right now that's a big old fat downtrend, and the resistance is way the heck up here. So resistance at this point is up here around 270, more than a double from the price where we are. So we could rally back up in here. By the time it does that, it may be over here more like 240, but there's no guarantees. We don't just push lower right now. All right, moving on. Let's see. Went through QQQs, did the VIX. Yeah. Well, decoupled VIX, what does it mean? The question came up. So at some point, either VIX is going to come back to the performance of the S&P 500, or S&P 500 is going to come up to the performance of the VIX. The VIX is basically outperforming. And I do have another chart that I popped into. Let me see. Popped it into Discord right before I got started here. See if I can find it. Yeah, there it is. Let me pop this one open. Drag it over. Right here. This is VIX seasonality, and we're hanging out right here. We can expect maybe, a little bit of VIX volatility heading into the new year, and then a VIX crush. Now this is VIX itself. So watch for this move down. This is usually corresponds to a rally in the S&P 500 right in the beginning of the year. And then we get a pullback in the S&P 500. A rise in VIX. That's a 10%. I mean, that's from a negative 8 to a positive, 12. That could be a heck of a trade right there. You could trade it with VXX. You could trade it with UVXY potentially. And then watch out. We typically get a pullback. This is a 20-year. This is an average move of 20 years. So this is not like I'm just pulling up last year's chart or anything like that. And then we usually see big volatility in March. That's where COVID occurred. So that COVID is in here. The 2020 March volatility is in this chart. But then we kind of settle down for the summer. Sell in May, go away. Summer gets boring. And then we start picking back up in August again. So, all right. That is VIX right there. I'll pull that back out of the way. I shared that in Discord. So, anyway, moving on. All right, MOS. Click back on the right chart. MOS. Not looking good. We got support right there that needs to hold. If you can't start making higher highs, then we can break down and see lower lows. And FCX. That one looks like it's going to pull right back down to the roadmap line and give us another test of support and see where we're going to go here. We hold that line right there. We can bounce and go. All right. That is so far just a 3-wave move though, but it does look to be on the more bullish proportion side. Yeah, right out to the 1618. So do expect it to pull right back down to about there. And then the next leg higher. My guesstimate for that would be right around 45 before the next pullback. 44. So right here, actually. And then potentially getting a pullback again that comes right back here. Right in that zone, then right back down in this zone. That's what I see on FCX. Then X, US Steel. Yeah, kind of the same sort of pattern looking like. A little bit. Pulling right, yeah, that one can definitely get the bigger breakout. Nice potential. Made a higher high, pulled back to the roadmap line. The next break up through 28.20 or so can set it up to rally back to the high we had back here in April. All right, I covered up Zoom or YouTube. There we go. Amazon, yeah, let's hit that one. Amazon crushing down lower still. It lost the Jeffry's rating today. Or yesterday, maybe. Not too good. Not too good. But we're not really pushing lower. We're just kind of making nominal lower lows, but we're still consolidating in the same zone we've kind of been in for 2 months now. Of course, need to break back up through. You quit making lower highs. That's, I mean, see this trend right here? Lower high, lower high, lower high. Lower high, lower high. Quit doing that. We got to make some higher highs. That's what Amazon needs to do. But if it doesn't, if we start breaking, if we significantly break lower, this thing can get way on down, maybe the 50s. That's pretty crazy, right? I can't even pull up enough history to get to see that the chart that far down. There we go. That level right back there. We might go retest that level right there. And then, of course, we've got this level back here, right around 60, whatever. I'm going to pull this on over. So that's our next support level on down, right around 66. Not great, right? If you're long Apple, if you're long Amazon. AAPL, go ahead and get that one out of the way too. Looks like we're headed right to that target zone. And pull right down in there. 122 area is the price, but we may stop at 124, 125. When we held that roadmap line 3 times, that was my prediction there on Apple. All right, APCX. Yeah, nice move up into the roadmap line. We need to get above it and stay above it. Low price stuff with a short history doesn't tend to be the most reliable for my prediction analysis. So breaking up through $2 is going to be positive for potentially higher prices. Was this a reverse split? 2 for 19. What even kind of split was that? That's ridiculous. Anyway. All right, RH. Looks like on a downtrend. So we've got a little bit of support coming in from these prior highs right back here. We break below 188 area, 187. Looks like we got lower to go, but if we can bounce off of this, get above the roadmap line, make higher highs here than we've made in the last couple months, RH can get out of this funk. This is why I say that it really looks like we're done with this not a recession crap, because all these charts are way beaten down. I mean, stuff's down 75%. It's just ridiculous. I mean, this one came down from 740 to 250. I mean, that's a huge loss, right? I mean, huge loss of value. So 60-something%, I guess that is. Just doesn't make any kind of sense. All right. Yeah, I got you, Valerie. All right. Who else? Let's see. DLTR. Nope, that's CLTR. Get my fingers to put the right keys in. Just sideways still. It's got lower highs and it's got higher lows, and eventually this thing's gonna come out in the wash and pop one way or the other. But right now, I don't know which way that's gonna be. So we're kind of working our way out to the end of this. If we do start breaking down, we're gonna go retest the bottom here. We break down below that. And we're going to fill this gap back here, potentially. Take us back to the bottom here. Also a sign of the times when Dollar Tree, the place that usually explodes during recessionary times, is getting smacked in the face. So PayPal looks pretty bad. I covered that in crypto power plays because of their crypto exposure. And breaking down below the box, this thing breaks the prior low over here. 44 is likely the target. Sorry, I don't have better news on that one. You know, it's Payment Buddy Square is looking kind of positive. We still have an open echo trade on Square. Looks like it got a little bit of rally into the end of the day after starting the day pushing to a lower low. Positive sign. But we need, you know, this did make a higher high here, but it also made a lower low here. So that's increasing volatility. That's not what I really want to see. I mean, this is kind of expanding the range on both sides. So that's not what I want to see on that part, but it does look better than PayPal. So the potential here is to get back up above this high around 75. If we can get above the roadmap line, 95 is in the cards very quickly. Back to this high, and if we can get above that, then 200 becomes very likely to get back up to the prior high. Alrighty. V for Visa. right to the roadmap line. That's a great potential setup right there, actually. Move that over, move that over. Next bounce can potentially take it out to 224. Does seem to have some resistance though, so be cautious. Draw that line right across there, flat. Resistance, 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 resistance. Can it pop through? If it does, that's going to be highly positive for a move up to this 240 area right up in this zone right up here. You know, short term 224, but longer term looks like it could go right up in this 240 area for Visa. All right, DG, Dollar General is not looking as nice as DLTR. That's a lot more volatility, a lot more crap, and just sitting in a range. Dollar store is just not going anywhere. Don't have better news than sideways. That's what I would expect right now. It's kind of been the support zone, the resistance at the prior high. Can't break out, can't break down. What do you expect? Nothing. That's what you expect. All right, Netflix, NFLX. Positive signs. It held resistance from that gap fill. I said it was likely to pop up and fill that gap. Well, it pretty much did. Needs to break above it to get continuation. Coming back to the roadmap line. Beautiful setup. It may retrace a little deeper. But if it breaks back out up above here, above right there, we can see it return and fill this gap that we have over all the way up here. That would be a huge move up for Netflix. News in the computing space, Wells Fargo was saying that Disney should liquidate ESPN. We'll see if that happens. Disney looks like it's got a little bit more to go to get down to my target circle down there around 80. Made a lower low yesterday. Not far to go. Get down there around 80. All right. We've been running longer than 30 minutes. I'll kind of hit a last couple here. Geo. Yeah, it looks like it's on the way back down. That's a REIT group. They don't always kind of flow exactly like my patterns. REITs play by a little bit different ball game. Similar, but not quite exact same rules. I'd look for that kind of move. It did it back here. Do it again. Of course. Check this right here. Yeah, it's already bigger than that move. Yeah, so might see a bigger pullback there. All right, then UNH. I'll wrap this up. Looks like more sideways. So I do have a potential target down here. If it's unable to break out, then it's probably going to go visit this target down here. Has this big corrective. This was a big three-wave corrective up. This looks like a 1-2, potential 3, 4, 5 down into this zone right down here. It could extend down to 420. So be careful if you're long. I definitely watch out on a break below about 510 that we're going to see at least a retest of this 490 area. If not, the prior low down here around 450. Like I said, these numbers starting to get a little crazy to the downside, and 420 if this really starts getting going. So be careful on that. I have a Christmas special for the Market Roadmap for only $5. If you want to jump in, that gets you 3 months of Market Roadmap. Go to jeffreytrader.com/Christmas. Link in the description on YouTube. And if you're interested in that. Otherwise, you might, if you're watching on YouTube, you might want to check out a video over there, wherever it is. And otherwise, I'll see you again next week for the last 30 minutes of awesome of 2022, and we get ready for 2023. Merry Christmas, everybody, on Sunday. And I don't know what 3 months is. I think there's an offer for $19 for the whole year. So you can, if you go check out the link, like $20 get you a whole year of Market Roadmap. And you get in my private Discord server as a bonus. So go check that link out in YouTube on the description. And while you're there, like and subscribe. I'll see you guys later. Bye, everybody. Merry Christmas. We'll see you again next week.